Vandana Hari is joining in right now to take us through what exactly are the market expectations in terms of the eventuality of the pricing of crude. Vandana, thanks very much for taking out the time and speaking with us. I mean, we've got people talking about a level of $100 per barrel, and looks like we are starting to move there, considering now that there are talks of Saudi Arabia being incapable of filling in the supply gap once the Iran sanctions come into place.
Good morning. Look, there are very valid concerns about supply. The fact that Iranian oil has begun to disappear from the market, more of it is expected to go offline as the U.S. sanctions against the country start next month. All of that is absolutely valid concerns. I think what the market probably is ignoring right now is a couple of things. First of all, the OPEC's 15 members and Russia. Now, not everybody within OPEC has the capacity, but those that do, Saudi Arabia, Iraq, some of the Arab Gulf neighbors of Saudi Arabia, they have stepped up production. They have been consistently ratcheting up output starting in July. And if you look at the latest numbers, and from your esteemed organization as well, Reuters has put out a survey for September as well, I see that while the figures don't always match, but if you look at the overall September production by the 15 members of OPEC, it's up month on month, 300 to 700,000 barrels per day up. If you look at how much it is still falling short of with regard to the implied target of those 15 countries, because remember, the worry was that they were cutting much more than they had pledged. They are just about 200,000 barrels per day below what they should have been producing. So that over compliance or over cutting, if you will, has been eased considerably. If you look at Russian numbers, the energy ministry has just announced the September data. Russia has reached an all-time post-Soviet high of nearly 11.4 million barrels per day. So more supplies are coming. Now, as I said, the concerns about do Saudis have indeed have the 1.5 million barrels per day spared that they talk about? Is it readily available? That's a very valid concern. I grant you that. But, again, as I've been saying, I doubt they would put out a number like that without actually having the barrels to back it up. I do tend to believe that there is some truth to the notion that the OPEC ministers offered two weeks ago in Algiers, or rather the Saudi minister, that they are in a wait and watch mode, because there is a lot of demand concern that is starting to make its way into the market as well. So they're probably being a little bit moderate and just don't want to unleash all the extra barrels into the market right away.
The fact that there is talk of the possibility of a cutback in terms of imports from India and China, being one of the largest importers of Iranian oil. I mean, in light of that, is the calculation of the excess capacity that could be filled in by Saudi Arabia taking into account the kind of gaps that might be there if India and China back out and don't import that much from Iran?
Look, it's if someone argues that let's imagine the worst case scenario, up to 2 million barrels per day or even more of Iranian crude disappears from the market. So first of all, again, we should bear in mind that's the worst case scenario. Now, if someone argues that Saudis alone may not be able to match barrel for barrel all of that oil, that's a fair argument. But then again, let's not forget that it's not just the Saudis. As I've just mentioned, Russia is increasing as well. And there are a few Iraq has tremendously increased its production and has a little bit of potential to go further. So is the extra oil there for 2 million barrels per day, if that is the worst case scenario? I believe there is. I think the fear, which is, again, I keep saying the worst case scenario, but I think that's what is happening in the market. It's paranoia almost. I think what the fear the market seems to be pricing in right now is, what if, in addition to the Iranian barrels, what if you have the ongoing problems in Libya, Nigeria, where there's constant militant attacks on infrastructure, and a few 100,000 barrels per day of production and supply can just disappear overnight. So yes, if such a scenario pans out, absolutely, you could see, or you would see oil going through 90 and 100. But again, as I said, that is like, if that happens, that is not my base case scenario right now. I think also I do believe the US, especially as the midterm elections are around the corner, around the same time as the Iranian sanctions begin, actually, I don't think the US will sit on its hands. It does have plenty of surplus strategic oil reserves that it can release into the market. And really, I know what the Energy Secretary Rick Perry said last week about it not being such an effective mechanism. But, I disagree. I fully expect if there isn't much more coming from OPEC and prices continue rising in the coming weeks, that the US will release its stocks.
All right. Vandana, just one last question on where you see the prices of crude settling in, keeping in mind the events surrounding, and also the fact of, the point being made by a few that now with the Iranian oil out of the picture, the oil prices could be held hostage at the hands of Saudi Arabia and Russia.
Okay, so the first question, in the coming months and into the fourth quarter of the year, which is traditionally we are getting into the northern hemisphere winter season, traditionally the high oil demand season as well. Not quite yet, we're still a little bit in the shoulder months, but as we get into December and January, definitely global oil demand seasonally spikes. So I think that the situation, the circumstances are in place for perhaps 80 to even 85, 90 on a sustainable level. I don't think it will go beyond that, again for the reasons that I mentioned before. There is more oil coming from OPEC and the US will release more stocks. I think as we get into the first and second quarter of next year, I think demand is going to be a very close one to watch. So China there are signs that the Chinese economy, manufacturing activity is starting to slow down because of the tariffs. And, then we have to very closely watch the other emerging economies, which are the major contributors of global oil demand growth, all the way from Indonesia to India, South Africa, several countries in Latin America. So going into Q2 next year especially, I think we could see prices come back down to below $80 a barrel as the demand growth slows down and the seasonal impact is gone a little bit as well.